Warmly welcome you to our session. Let's straight away go to the question, which reads as a company's working capital was 43,200. Subsequently, the following transactions occurred. Creditors were paid 3,000 by check. Bad debt of 250 was written off. The stock value at 100 was sold for 230 on credit. Working capital now is four options are given. What is working capital? Working capital is what is needed to conduct the day-to-day transactions. Day-to-day activities of the business will include purchases, sales, collection from debtors, repaying creditors, incurring expenditure, etc. Another definition is working capital is the difference between total current assets and total current liabilities. In a simple example, let us say the total current assets are 300,000 and current liabilities are 200,000. If you deduct one from the other, you will be left with 100,000, which will be working capital. Current assets may be defined as sum total of stock, debtors and receivable, cash, bank, etc. Similarly, current liabilities are sum total of creditors, accounts payable, accruals, etc. Further, if a transaction takes place within the working capital accounts, that is current assets and current liabilities, that will make no changes in the working capital. Only a part of the transaction is in the working capital accounts and the other is elsewhere, then it will definitely affect the working capital account. To see further, look at this extract of balance sheet where current assets are given, current liabilities are given. The difference between these two is working capital. In the first example, let us say the debtor repays 100. What happens is the effect of that. Okay, the debtors will, since he has paid 100, it will come down by 650, whereas the cash will go up by 200. If you notice it, there is no changes in the working capital. The second example, say we settle a creditor. So what happens is everything remains the same. Cash will come down by 100 because we have repaid it. Similarly, the creditor's balance also will come down by 100. Therefore, there is no changes in the working capital. But if you look at the third example, which goes as a stock worth 100 was sold for 150. Two accounts are getting affected by this trend. One is the stock is getting reduced by 100. At the same time, debtors account is increasing by going up by 150. If you understand the double entry of these two transactions, let us take the first one where the debtors amount has gone up by 800. That means debit debtors account. Where has the credit gone to? It has gone to the sales account and which will be subsequently written off in the trading account. Similarly, if you look at the stock has come down by 100. It means stock account credit by 100. The debit, it has gone to the cost of sales account and will be written off in the trading account. Oh, now you have understood what type of transaction will affect the working capital and what will not. Now let us go to the question. First example here, creditors were paid 3,000 by check. What are the effects of this transaction? Bank balance would have come down by 3,000. Asset is coming down by 3,000. Also current liability. The creditors balance is also coming down by 3,000. So that is also less. Therefore, there will be no effect. Let's go to the second transactions where a bad debts of 250 was written off. A current assets debtors has come down by 250, whereas the other entry gone. If you think carefully, you will know bad debts, expenditure, and that will go to profit and loss account and it will get written off. Therefore, the working capital account will come down by 250, say minus 250. If you look at the next transaction, stock valued at 100 was sold for 230. Two things have taken place here. One, the debtors have got increased by 230, whereas stock has come down by 100. Here again, if you notice, the other section of the transaction has gone to outside working capital area, which is to trading account as sales. Therefore, an increase of assets 230, a decrease of asset 100. So the net effect is plus 130. If we recapitulate, the first transaction no effect, second transaction minus 250, the third transaction plus 130. Net effect of these two is minus 120. If you deduct that from 43,200, it will be 43,080. A is the answer. Hope you all have understood. We have introduced flashcard, where the summary of the class that we had is given in, say, like bit notes. By looking at this, if you can visualize what we have studied for the day, then you have understood the lessons correctly. And if you feel any doubt, if it is not clear, that means you will have to repeat the lesson one more time. You may take a snapshot or you can write it down. Every now and then, if you look at it, you will, if you remember it clearly, that means it will stay with you. Dear listeners, if you have benefited by this small session, we say that this is provided to you by YouTube channel name SL Account School. We are hoping to come out with a lot more subjects like this, and we request you to subscribe and inform your friends and interested students so all can benefit. Thank you.